This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. It's Thursday, June 20th. This is Not Your Advisor with NYU Grad. Let's jump right into today's session. Today was really about rotation out of the risk names and into Dow names. But before I jump in, I wanted to give a quick shout out to a paying subscriber. I'll just use initials LP. LP had asked a really good question in the paid subscriber chat, which I'd like to share with everyone who's either listening or a free member. LP asked, what happens if all the retail buyers become sellers, like in names like NVIDIA? Do you think that institutions are going to step up and buy NVIDIA stock that is up 160%? So I replied to LP with this graphic, which I'll include in the show notes, but it looks at the data of household stock allocation as a percent, like how much are they invested in, right? So looking at like the peak from the 2000s, it peaked out at like 30.9% before the dot-com crash. Right before we peaked during the great financial crisis and crash, we peaked at 26% of households owning like stocks as a percentage of all their assets. It was 26%. Looking at COVID, before the COVID crack, stocks represented 34% of their portfolio. And we are now just above the COVID high, which I'm going to call this the AI high. So we'll see how much longer that this can last. But I also replied to LP that my honest answer is I don't believe that in historical terms, retail buyers can navigate this and say, oh, retail buyers, Main Street, are going to sell the top and buy the bottom. I've never seen it. I've never seen the headline in history where it says Main Street gets out of Wall Street and leaves financial firms holding the bag. Like, when have you ever seen that? We are trained by the sell side like mice in a wheel, in a cage, to always buy, whether it's at the high or at on the way down, and we don't sell until the bottom. And this chart, this graphic, is proof. We load up as a percentage of our portfolio and savings and retirement funds. We load up on risky stocks at the high, and then we sell at the most inopportune time at the low. This is how it's always been. I believe this is how it will always be on a macro level. Because let's say hypothetically, we all, you all and I, somehow find a way to gather, I don't know, through Facebook or through TikTok, I don't know, some kind of group, private group that Wall Street does not have access to, and say, we're going to sell NVIDIA and the market at the highs. We're going to get out before Wall Street. What do you think they would do in turn? Do you think they would let that happen? Or do you, my suspicion is what they would do is use legislation to make it difficult for that to happen. They would increase capital gains tax for 401k liquidation. They would reduce or incentivize folks to not sell. And they would also use their computer trading algorithms to increase the price. And then most of us, it only takes a few, to come back into the waters and start bidding up prices. And then, oh yeah, my cousin bought this and my sister bought that and my coworkers bought that. And then we just start to buy and everything's okay. And then they'll sell and we'll be the bag holders again. Keep in mind, they are the casino. They are the custodians of our savings, our bank, our checking accounts, and they're the market makers. They can see the order flow. So in the long term, it's very difficult to beat the house. So that was my answer to LP. I will post that chart on the show notes. So taking a look at breadth, we had 644 new highs, 333 new lows. 42% of stocks were advancing versus 55% declining, and 50% of stocks were below its 50-day moving average, whereas 38% of stocks were below its 200-day moving average. I'm going to be adding one extra line of data to the breadth studies. Now, as you know, I think breadth studies is one of the most important things to looking at financial markets on a daily basis. It gives you a pulse and a sense of how, what the intention of the sell side is. However, it's not the perfect reading when you look at new highs, new lows on the NYSE, because the NYSE includes many smaller companies that can kind of skew this data, right? The new highs and new low list. Because sometimes if you look at what stocks made those new highs versus new lows, there are a lot of companies there that you may not have even heard of. So one data metric I'm going to add is the NASDAQ new highs versus new lows. And today we had 26 new highs versus 116 new lows. So that's a big difference, right? When I take a look at the NYSE number of 644 new highs versus 333 new lows. So expect that on the daily podcast moving forward. What stuck out? The Dow 30 names that were holding up the markets. As you saw, the Dow was up while the rest of the indices were down today. And I'll go through some of those names, but the Dow was up almost 300 points or 0.77%, whereas the NASDAQ was down 140 points, down 0.79%, almost a mirror image. And the S&P was down 0.25%. Taking a look at what was driving the Dow higher, you had CRM bouncing 4.5%, IBM bouncing up 1.95%, Chevron up 1.9%, Amazon, now part of the Dow, up 1.74%, Cisco up 1.6%, Travelers Insurance up 1.59%, J&J up 1.5%, Merck up 1.3%, and Amgen up 1.3%. Not your high flyers outside of Amazon and maybe Salesforce. Taking a look at the sectors, energy led the way, up 1.35%. Then you had utilities up 0.74%, basic materials up 0.5%, financials up 0.4%, communication services up 0.39%, healthcare up 0.19%. On the downside, you had technology leading 1.3% in the red. What was strong today? I'll go through the list with you right now. So AMD up 5.14%, UVXY, that's bullish volatility, up 4.99%, silver futures up 3.99%, SLV up 3.93%, Copang up 3.9%, Pan American Silver up 3.7%, Barrick Gold 3.69%, Zoom Communications up 3.49%. That was making lifetime lows prior. MGM Resorts up 3.15%, KB Homes 2.9%, Silvercorp Metals 2.7%, GDX 2.69%, Harmony Gold 2.68%, SILJ Junior Miner ETF up 2.65%, GDXJ Gold Junior Miners up 2.49%, Kinross Gold 2.26%, Wheaton Precious Metals 2.24%, Roku up 2.08%. As you just heard, a lot of the gold, precious metals, miners, as well as ETFs and royalty companies were green today. Let's go over what was weak. You had DJT, the Trump media company, down 14.9%. Hims and Hers down 10.77%. ARM Holdings 7.27%, Sweetgreen down 6%, Rivian down 6%, Reddit down 5.8%, Qualcomm down 4.9%, AI 4.7%, ACMR Research 4.6%, AppLovin down 4%, Kava down 3.6%, Broadcom down 3.2%, natural gas futures down 2.7%, Nvidia down 2.5%. That's big. Freshpet down 2.3%, Apple 2.3%, Beazer Homes 2.2%, Riot down 2.25%, Lam Research 2.3%, DoorDash 2.17%, SMH 2.15%, Semiconductor Philadelphia Semiconductor SOX down 2.06%, KO Vanning down 1.9%, CrowdStrike down 1.9%. So I will wrap that up for the free members. Continue to watch the Mag 7 yields, economic data. On Friday morning, we have the PMI manufacturing numbers coming out. Check out the tech layoffs via TrueUp.io, credit card delinquencies, the Indeed.com job listing data series, and the true rate of unemployment. Premium members, please stay on. I have a few charts, probably over 25 to go over today. That's my train.
Stand clear of the closing doors, please.